tax and regulatory services focus on incentives and subsidies. He comes with 22 years of professional experience and has presented various papers on subsidies across the country. Bhavesh has been extensively involved in advising multinational and domestic companies across a range of sectors, such as manufacturing and automobile. With these words, sir, may I request you to kindly enlighten us on production-linked incentive scheme of central government. Over to you, sir.
Good evening to all. Am I audible here?
Yes, sir, you are.
Yeah, thank you. Thank you. So yes, first of all, thanks for giving me the opportunity to speak on the August gathering on the production link incentive schemes, which have been issued by which have been notified by the central government. And we'll come to how it works. We'll also take examples of one or two sectors of how the working would be and what can companies really look forward to when they are looking at this production link incentive schemes. So the intent of the production link, so this is normally called as a PLI. The full form is production link incentive, but normally if you read anywhere, it will be called as PLI schemes. So the template of central incentives in incentivizing is, I will say, PLI is going to be the template how it is going to move forward from year on. So largely, if you see, this is how the incentive will be given to sectors from the central government. So if you see at this point of time, they have notified almost 13 sectors while giving and selection of those incentives. But as we move forward, we understand that this is how the incentive would be given. See, the intention of the scheme was largely, if you see, to create champion players, if I want to say. So in manufacturing, so this is similar to a model which was followed in Korea probably 10, 15 years earlier, or China, where they wanted to create champion players. And in some of these schemes, and we will cover two of them in slight bit of detail, I would say, the champion players along with MSMEs have also been considered while incentivizing this, and we will cover those aspects. So what is the scheme intent? The intent is for encouraging domestic manufacture, promotion of exports, and higher import substitution. So on these three pillars, there were also many other sectors which were actually vying for this incentive, but I will say 13 sectors have come and rest all will be followed, I will say, at some point of time. So this is to build a strong ecosystem about the value chain and integrating with the global value chain. So this is a vision of the Atmanirbhar Bharat as we see. The whole package of PLI would be towards the goal of Atmanirbhar Bharat. So incentive is for key global and domestic players in each of the sectors. So it is not that it is available only for export or it is only for domestic or multinational. So this is available for everyone. Obviously, the scheme has its parameters like who will get eligible, but we will discuss those in the two schemes. But largely, the scheme is open for everyone, if I want to say. What is the basic concept here? The basic concept here, in at least I will say most of the scheme, so if I say 10 out of the 13 schemes, the base year has been defined as 1920. So once that base year of 1920 has been defined, whatever you are selling in 21, 22, 22, 23, 23, 24, or going forward, that is considered as incremental sale. And that you get as a percentage of that incremental sale. So what percentage you get? So it is ranging from the percentage of 3%, 6%, even 10% in some of those products. So that's a very healthy percentage which comes back to you. The good part is this percentage, again, as I told you, is also a factor of your incremental sale. It is not dependent whether it is export or import, or rather export or within domestic sales or within the state sales. It will not depend on that. And how will you get this back? So as a process, how this whole thing works is government in all these sectors have appointed a project management agency, which will decide on how the policy would be function and how the disbursement would happen. So it is IFCI in some cases, it is SIDBI in some of the cases. So government has tried to outsource this activity. So there is a certain objectivity in this whole assessment. So you had the food PLI scheme, which was 24th June was the last date. You have the pharma where 31st July is the last date. So you'll have to apply on that online portal. There will be certain criteria which have been laid down. Post that, the PMA, which is SIDBI or IFCI, will go through your whole file, assess the whole thing, and then they will give you a approval letter. Post that approval letter getting, you will have to claim those incentive on a year-to-year basis. And this is not in a form of a script or anything. This is a straight cashback which comes to your bank account. So this is not in a form of what our learned speaker earlier told about script. This will be straight cashback which will be hitting your bank account. The investors who apply will be chosen from applicant pool based on eligibility and other qualitative factors also what they have given here. And as I told, it is a percentage of sale turnover. Friends, if you see the budgetary allocation under this scheme, which is very, very important here, it's a mammoth 1,97,000 crores have been allotted to this scheme over a period of 5 to 6 years when these subsidies would be given. So if you see, this is a very, very good scheme to look at. And somewhere we also understand that central government was thinking that some of these funds should be kept in an escrow account. So there is no confusion on the end use delivery of this when the actually refunds come in, because there have been a lot of criticism on the MEIS and other schemes because they have not been able to meet the commitments which were there. Just one more important point, what I thought would be important here is this PLI scheme is over and above all the other benefits what you are looking at. So whether it is the state industrial policy or as the earlier speaker talked about mover, all this can be claimed together. It is not that once you have claimed under PLI, you cannot claim under any of the other policies. You can claim all of them together. In one or two PLI schemes, there's a debar that you cannot claim under two PLI schemes, but that's fine. So if you have claimed under PLI, you can claim under the state industrial policies also and the mover scheme also. Now, if you take a certain example and if you total all of this on the screen, what you are saying is just a solar PV module manufacturing. If they really get into India, you can look at a 8 or 10-year period, almost 70 to 80% of the project cost coming back to you as a subsidy. Obviously, it will depend on quite some factors here, that where are you manufacturing, which is the location you have selected. State industrial policies also give a very, very handsome benefit because we are in a era of what we say competitive federalism, where each state is fighting. PLI is location agnostic. So whether you are setting up in Kerala or Karnataka or Tamil Nadu, that does not matter. So you will be eligible for these benefits which are there. So if you total all of these three and you plan it correctly, and if you at least for these three also, if you do it correctly, I will say 70 to 80% of the project cost can come back to you as a subsidy. So that's a very, very good mixture. So we normally call this as a capex agenda. So whenever you are planning any expansions or any kind of activities, please see that whether there is incentives available under that. So as professionals and chartered accountants, I always say that you may not be a master of all the schemes, but at least you should be aware that these schemes are available. So if there is a client coming up with a project report or something, there should be a bell ringing that yes, there will be a possibility to look at expansions or these subsidies. That awareness, I guess, would be very, very important when you are looking at these subsidies. Obviously, you cannot practice in all of those, you cannot be master of all of those, but at the same time, you should at least have the awareness. And let me tell you, friends, as a professional experience, I would say that if because normally we go to the clients to ask for taxes and that's the expenditure side, but if you go to the client with some revenue based proposals on the income side, I guess you definitely get a better welcome is what I have seen. And as a practice also, I will say these schemes is a follow-up practice. You need to follow up continuously, but I'd say it's a good area of practice which needs to look at. So if you look at people who are practicing in this field in India, it is as chartered accountants, it's very, very less. And all these schemes, let me tell you, whether it is talking about certifications or whether it talks about calculations, those analysis, the revenue analysis, with our grip of figures as chartered accountants, I feel we are the best suited to really do this activity. Coming more deeper on the PLI one, so just now, if you see, PLI is already done for the four sectors, which was mobile phone, electronics, critical medical drugs, manufacturing of medical devices, and manufacturing of IT hardware. And you see the budgetary allocations of that. So mobile manufacturing had a 41,000 crore budget. And if you read newspapers where you see that Apple decided to set up the manufacturing plant in India. So all the contract manufacturers of Apple, whether it is Wistron, whether it is Pegatron, whether it is Foxconn, all decided to set up in India and expand their facilities based on this scheme. So it's a very, very good allocation what they have given here. Critical medical drugs. So you see the API and in the pharma industry. So that also got a very, very healthy response. And you see the figures of what is the employment being generated and what is the investment which they are planning to bring in India. So that is something which actually encourages that whole Make in India and the Atmanirbhar Bharat syndrome, I will say. So that is something we'll have to see how they take it forward also. So the implementation is also going to be very, very important. These are cases which have approved, but how proactive is the government in actually allowing those refunds at a later stage and how smooth that process is will also play a major part to look at how this incentive will be really worked on. The schemes which are recently announced, so you have the IT hardware products, you have the telecom and networking products, you have pharmaceutical drugs, which we will cover slightly bit in detail. The food processing subsidy, just the last date was day before. White goods is one of the policy which is going on. Advanced chemistry cell battery and high efficiency solar PV modules. So all these schemes have been announced and they are in the different stages of implementation. So just now, just to give you an example, solar, the last date is 30th June. White goods, the last date is 15th September. Pharma, the last date is 31st July. So at least if you have any of your clients in this sector, you can dig a more slightly more deeper. I understand that solar and high efficiency, rather the advanced chemistry cell batteries will be restricted to very, very top players. I will say 6 or 7 players, I will say in this country. But if you are looking at least pharma or white goods or food processing, I guess that sector's uh, covered the MSME sector also, or the smaller ones also who are actually looking at this space. Let me give you an example in food processing. So the scheme which ended day before, it had a very, very good budgetary allocation of 10,900 crores. So you had that various industries who were filing the applications, and we understand out of the 150 applications or 120 applications which have gone in this, almost 10 are from the state of Kerala. So people have availed benefits, or rather have applied for benefits under this scheme. Because see, as a function of an incremental turnover, this is a very, very good scheme to look at, because you have that turnover higher and you get that incentive. So it's a function of incremental turnover. So what the government wanted is to have a clear-cut outcome-based subsidy. So you produce more, you get the subsidy. You produce more, you get the subsidy. So the end use of that subsidy can actually be measured, I would say. Now, in the schemes which are in the pipeline, you have auto and auto components, you have specialty steel, and you have textile. Again, in this, I will say auto and textile are going to be the larger players where subsidy people will be able to actually avail. So if any of your clients are under this, so it will be worth to look at pharma if someone there is there, or white goods, AC, LED, or in auto or in textile, to see what the scheme comes. The scheme has not yet announced for these three sectors as we see, but it would be worthwhile whenever it comes to look at that subsidy in that way. And just as I told you that you can actually avail all of this. As the learned speaker earlier also tell, the whole custom benefits which are there, along with the PLI, you will be able to claim this. So let's spend the next 3-4 minutes on how the pharma scheme works. And also the white goods, because that is how the two important schemes which are going on at this point of time, it will be very, very relevant to look at. So this scheme comes with a budgetary allocation of 15,000 crores. So that's the budgetary allocation under this scheme. The scheme operational guidelines are published on 1st June 2021. The application window is 60 days. So the last day to apply under the scheme is 31st July 2021. And I always say clients that don't look at the last date, because the portal and all that do become a problem at some point of time. And who better than chartered accountants? We know that how the portal behaves on the last day. So 60 days window is what they have given here. And they have also specified the products which will be covered. And we will slightly go that in a bit of a detail. So this is the category of products which are covered. So you have the products covered like biopharmaceuticals, complex generic drugs, patented drugs. So this is the main products which is bio-based, biopharmaceutical based, I would say. So this is something which would be covered under the incentive. There's a category 2 products like all the APIs, the active pharmaceutical ingredients will be covered under this. So there was a Pharma PLI 1 also. This is Pharma PLI 2. So whatever products were specified under Pharma PLI 1, that will not get specified, but now the other ones will get covered under this scheme. And there is a category 3, which is sort of a residual kind of a section, which is products not covered under 1 or 2 can be covered under 3 when you are looking at incentives. So these are typically the repurposed drugs, the autoimmune drugs, anti-cancer drugs, anti-diabetic drugs. So though we are not subject matter experts on what falls under this scheme, but at least as I told, if you are talking to clients, the client will know obviously which category they fall in, and you can obviously help them with this whole implementation and filing of these applications which are there. Let's see what are the certain eligibility criteria which we need to look at. So the first important criteria what we need to look at is what is your global manufacturing revenue? So the companies have been divided into 3 categories. So you have a category A, a group B, and a group C. So this is based on the manufacturing turnover of the enterprise, and the base year what they have decided for this is 1920. So 1920 has been kept as the base year. So whatever is the group turnover as on that date would be looked at, and you will be sitting in a certain category. So Group A obviously are very, very large players like the giants in the pharma industry. I guess let's see at Group C when it is talking about a turnover of less than 500 crores as of 1920, and also MSME category. So here they have included MSME as a certain category. So what was happening here is that, see, the whole discussion was around that all these schemes are becoming very, very centric to very large players. So here they have also included MSME as one of the categories. So if you are in group A, B, C, they say that you should invest at least 1,000 crores, 250 crores or 50 crores, whereas there is no limit for a MSME to invest. So even if you say I will invest 5 crores, you will be eligible under this scheme. And we will come to the eligibility criteria also. So what they say here is, so if you see group A, you have 1,000 crores, which is the upper limit, which as I told you, this is for very, very large players. But group C MSME has no such criteria. Now, will it be the case that all who are applying for those incentives would be eligible? So that's not the case. This would be a restricted scheme, if I want to say. So Group A will have 11 participants, Group B will have 9 participants, and Group C will have 35 participants. Now, out of these 35 participants, 20 are MSMEs. So there is almost a sort of a reservation for MSMEs under this, where out of the total 55 participants who are going to get qualified under this scheme, 20 would be MSMEs. So MSMEs definitely have a better visibility, or rather a better chance to qualify under this scheme. So we will see what the subsidy is now. So we saw which category do we fall in. We also saw that what is the cumulative investment to be made in that period. And now let us see how those subsidies actually work. The subsidy is linked to the category of products what we saw. Just that one more point before that is the 15,000 crores has been divided into Group A as 11,000 crores, Group B as 2250, and Group C 1750. So the MSME will fall under the third group, which is 1750 crores, which is there. And the incentive, as I told, the first year of incentive would be 22-23. And it will be for a period of 6 years. So it will go up to 27-28. And the important point here is the base year for all this calculation is 1920. So whatever you have incremental over 1920, that will be considered for the incentive calculation. We have taken a very simple example, just taking a very simple example here. How it works is, so suppose your base year turnover for 1920 is 1,000 crores and there's 100 crores. Let me take an example here, 100 crores. And now in 22-23, the turnover is 120 crores. So on that 20 crores incremental in 22-23, on that 20 crores incremental, you will get a 10% increment, which will be subsidy, which will be 2 crores. So that is, as I told, a straight cashback, which will come back to your bank account, which is very, very important to understand. And so then in the next year, in 23-24, you should at least have a 7% increment on a year-to-year basis. So what they are expecting here is there is a minimum threshold in all the schemes, which will talk that you should have a 7% increment. So if you have a 7% increment, so in our example, where the first year sale was 120 crores, you should have 107% of 120 crores. So if that is being achieved, you will be eligible for claiming those incentive for the next year also. Now, being a 6-year subsidy, if you are not able to reach the criteria of investment or turnover in a specified year, that 7% criteria, you will not be eligible for benefits under the scheme for that year. But you will be eligible in the year where you are making that investment and when you are actually getting those benefits. So the year which is gone, you cannot recoup it, but it is not kind of a permanent thing that if you are not meeting that 7% criteria, it's gone. So you will still be eligible for the subsidy. So this date, as I told, is 31st July. Very, very good scheme to take benefit of. And I will say people should encourage, rather as professionals, we should encourage clients to look at these subsidies. Probably in the next 5 minutes, we will also cover what is PLI for white goods actually. So what they have done is, and this scheme is not for the finished goods manufacturer. So this is white goods is the name. They have kept it for ACs and for LEDs. So that is how it has been worded. So it is for air conditioner and for LEDs. But this is not for the finished goods manufacturer. This is for the component manufacturers. This scheme is for the component manufacturers. So if you look at air conditioners, they have given high value intermediaries, low value intermediaries. There is also some of the products like copper tubes and these products which are never being produced in India. So the intention here is to have sort of a backward integration. So some of the products which are not getting manufactured in India, let's cover those products and try to see whether any manufacturing facility could be built in and reduce our dependencies on China and other countries, I would say. So act as a good import substitution. And then you have the low value intermediaries of ACs also, which will be looked into. Now, and in LED, again, if you see in Indian perspective, none of the LEDs is actually manufactured in India. What happens in India is all assembly actually. So a complete LED is still not manufactured in India. So the intention of this scheme is to bring all those component suppliers to India, or encouraging the Indian domestic players to actually get into the LED core components. So whether it is the LED chips, LED drivers, LED engines, all need to look at whether they can actually start the manufacturing activity in India. So what they have done is for eligibility criteria, they have given 3 criteria here, 3 yardsticks here, I would say. One is what is your gross block, what is your global revenue, and what is the net worth. And they are going to see this as on 31st March 2020. So here also, what they are looking at is 31st March 2020 is going to be the benchmark year. And here also, you see the LED and that space, they have got normal investment and large investment both, where even a company who has a 5 crore gross block as a normal investment can still get benefits, who has a turnover of 20 crores or who has a net worth of 3 crores. So here also they have kept quite some space for the MSME or the smaller players, I would say. We will be circulating this presentation to the organizers, and probably they can circulate to you also, so you can note down this, because on paucity of time we may not be able to cover the nitty-gritties of the figures, but we'll be circulating this one. Now let's take an example of how this will work, and there are various thresholds being laid for various products here. Let's take an example of LED products, because that is somewhere the scattered players are there, and that is somewhere the smaller players would be able to actually claim this incentive which is there. So if you see what they are expecting here, and they have divided the categories into two. One is a large investment and one is a normal investment. So if an investor is able to commit that in the next 5 years, I will be able to invest 10 crores. So 2 crores every year. So the total investment is 10 crores. And I will be able to have an incremental turnover of 60 crores on that eligible products, whichever are there. So first condition is I need to have an investment of 10 crores. So first year two, second year two, third year two. And as on 31st March 2020, whatever my base year turnover is, for the next years, I should have an incremental turnover of 60 crores. So that's a very, very high figure, I know, to have an incremental turnover of 60 crores. But if you achieve this, you get a subsidy which is 6%, 5%, 4%, which comes to these figures, what you see. So the total subsidy will come to 9 crores. So on an investment of 10 crores, you will look at a subsidy of 9 crores. So almost your project cost is coming back 100% over a period of 6 years. So the intention, as I told in this scheme, is keep producing, keep rather doing this part, and you get those incentives which are there. So this is a very, very good subsidy to look at. And if you look at the larger investment space, you invest 25 crores, you will get a minimum PLI of 22 crores, which is there. So over a 6-year period, if you have a 450 crores, so this is for large investment. But I think so many players, you will find it in the normal investment who are able to claim this subsidy which is there. This is for air conditioners. As I told, we will not get into all the categories in detail. I think so what was important here was to understand the concept of how PLI works. Now, taking back, friends, what are the opportunities of professional nature in this? As I told you, many few CAs actually practice into this. And we feel that this is too cumbersome. And yes, this is cumbersome. I will not say that this is not cumbersome. This is involves some follow-up. But if you make this as a specialization, and as I told you, as soon as you move the professional ladder, and if you want to come out of the compliance practice, I guess this is a very, very good opportunity to look at. And I'm sure the yesterday speakers also, Mr. Modi, and they must have told you these points, like how this actually, because you're bringing value to the clients back, and how you can actually get a higher pie in the benefit also what the client is getting. What we had seen and what is important here is, because obviously ICAI also says do networking, do partnership, make a larger firm. What we will always suggest is, so if you are a partnership firm with 2 or 3 partners, let us dedicate one of the partners who will exclusively look into this. So friends, this practice is with slightly longer gestation period, I would say, because some of the clients will come to you, they will decide to invest, then they will invest, then they will get the eligibility certificate, then you claim those incentive on a year-to-year basis. So the first 4 projects which are there may take a larger time, because this is a slightly longer gestation period. But if you are a partnership firm, depute one of the partners to actually get into this and say, boss, you do this, only this practice. I guess that would be the way forward, because see what happens, because you get a connect in the newer enterprise, which is now actually planning to set up or expanding. You can say that my other partner can do the tax audit, the other partner can do the audit, someone can do internal audit. So it becomes a network and a chain. And even if you're not into partnership, can you tie up with some network firm in Delhi, because PLI, some of the aspects will be looked at in Delhi only. And if you are looking at state incentive with some Delhi-based clients wants to invest in the South, can you be the network partner for that to look at state incentives? Many of the certifications also need to be done by independent chartered accountants. So all in all, I guess the thrust what these schemes incentive provides on the professional opportunities and the trust what has been thrust on the chartered accountants when they are looking at this, I guess it is really something to see. And I will say that look at these opportunities, be aware, at least be seeing what is happening in the market. You may not master that policies, but I would say very, very important to look at and be aware and keep your, I would say, ears and eyes open to these things and keep educating the clients. So with this half an hour slot, I thought I will cover the basics of PLI. And this was all from my side. I thank the organizers for giving us an opportunity to speak on this one. Over to you, ma'am.
Thank you. Participants, in case any questions, please do write to us. Meanwhile, let me remind you that all the presentations which have been made will be hosted by us at the Kochi ICAI.org site. So you can log in and download it. And within a week or so, it will be even put on YouTube, so you can watch it there. So far we have only one question come general Q&A unless something any speakers personally. Question is, can a professional, CA, CS, etc., set up a startup without attracting disciplinary proceedings? Will you be able to answer, or Bhavesh ji? Bhavesh ji, can you hear me, please?
Yeah, I can hear you. So I'm not sure because this was a startup question. So whether it is for the earlier speaker Priyanka ji, so whether she can pitch in here. I guess she's there on the call.
She's there. All the speakers are there with us, but Priyanka ji is a company secretary, so I don't know if she can answer for a chartered accountant, but definitely for a CS, she can answer.
Yes, definitely. I'll try my best to answer that, because we have enrolled for a course which was MSME course, so that we have done recently, and so we also had the same queries whether we being CS can also have a startup or not without infringing any of the policies, because we are also restricted somewhere or the other by different policies of the ICAI regulations. So definitely we can start up. Keeping everything else in place, we can start up, and there is no such restrictions that the people who are members of ICSI cannot start up. Yeah, so that is what.
And at least on the CA front, I would say that same what Priyanka said, that there is no express restriction. What we'll have to keep in mind is then we cannot get into the certification services which are related to that startup. So that kind of independence and all that from a chartered accountant perspective will have to be looked into.
Yes, definitely, sir. You just pointed out it right, because we have to choose one of them. So either like I am not doing anything in the field of CS, so I am an entrepreneur, so I have taken up that as my field. And yes, I can do the compliances of my own companies and my own ventures, but then I cannot do that for some other companies or provide services to other companies. That is, I cannot practice and be an entrepreneur or have a startup at the same time. So you have to choose one of them and just then take your path. Yeah. Thank you.
So if you see many of this practically, if you see many of this blue-blooded entrepreneurs, what you see on the startups, many of them are chartered accountants, if you see. So you take all the startups which have been successful in the last 8 to 10 years, you will find many of them as chartered accountants. So yes, that path is always available. And I guess with the training and the thought process that gets developed due to the professional curriculum, I guess we are well suited to do all this, I would say.
Even Lakshmi Mittal ji is also a chartered accountant.
Correct.
Probably not holding a COP, I guess.
Yeah.
Yeah, definitely not.
While we are waiting for further questions, I would like to remind all participants that tomorrow again at 3 p.m. we would be starting off on programs and policies of the Ministry of MSME. And again at 4:30, we'll have COVID and debt solutions for MSME. We are also expecting the Minister for Industries, Sri P. Rajiv, to join us. So please do join on time. If there are no further questions, then we can move to the vote of thanks. Since nothing has come on chat box. Chairman? Yeah, thank you. Let me start by expressing my gratitude to CII, Cochin Chamber of Commerce, represented by its Vice President PM Virani, who was more of a mentor and a guide to Ernakulam branch, joining us this afternoon on the 3-day webinar series on MSME. They very clearly informed us that they would be more than happy to support any MSME or member who wants their guidance. Thank you so much, Viram, sir. Mr. Ju Abraham, General Manager of District Industry Center, who joined us and spoke to us about the various schemes launched by the central government as well as the state government. And he's been with us till this moment. He was so ready to take questions and concerns of the members, clearly indicating how approachable he and his team is. Thank you so much, sir. We will definitely come to you for support very soon. Abhishek joined us and told us how the NSE emerged, when and how one can register on an SME exchange, the NSE criteria, as well as the regulatory framework, the process and benefits of doing registration. That was a very well covered presentation, sir. Thank you so much. CS Priyanka Chopra. What a vibrant presentation on startups, ma'am, with strong reminder again and again that every new firm is not a company is not a startup. You very clearly explained the benefits of that is available to a startup. Thank you so much, ma'am. We will reach out to you in case we have further queries. I hope we can do that.
Thank you so much.
CS Sudarshan, a classic example of Newgen can be focused. After qualifying in 2017, he has already authored many books, shown us how businesses can benefit from the export promotion assistance that is available to MSMEs. Thank you, CSC Chartered Accountant, for joining us this evening and enlightening us on the various export incentives available for MSMEs. CA Bhavesh Thakarji, the last speaker for the day, but definitely an equally important one as the others. Thank you, sir, for joining us and detailing the performance-linked incentive schemes in vogue. That was very enriching. I would like to also place on record my sincere gratitude to each and every participant for joining us and participating actively in the webinar. Looking forward to hosting you again tomorrow. A special thanks to our office. See you all tomorrow. Same time, same place. Thank you so much.
Thank you, madam. Thank you. Thank you.
Thank you, madam. Thank you all.
Thank you. Thank you.
Thank you, madam.
Have a nice weekend. Thank you.